Hey, so thanks for tuning in. So this is the third attempt at doing this after two failed attempts to do some tickers that people had sent in that died a death. So here we are, and I'm going to describe what this is all about, and then go through the buy signals that we've got so far this week, and pick whether they're going in the portfolio or not. So currently there's 6 spots. I have 9 tickers to go through. So we'll go through the selection process to see what we got. Okay, so I guess we'll start at the bottom first. So these are the 3 measures of what I term, correctly or not, signal strength. Okay, so equivalent of 1 month, 3 month, and 6 month. The main one that I use to rank like purely on score is the 3 month. Okay, because that pushes us out to try and, my intention is not to be some kind of day trader, scalper, whatever, right? So I'm looking at the longer trend. I want to try and be in positions for longer. Okay, and the other 2 come into it in terms of score, but it is weighted more towards the 3 month. But we use these 2 as kind of a toggle. So the very shorter term one is, obviously this one will move much quicker, will react quicker to most recent price moves. So this is kind of the, this, for all intents and purposes, this one's the early warning, right? Then what we want to do is, because we want to try and maintain the trades as long as possible, we then use the 6 month as a to try and keep us in as long as possible. So it has, so the equivalent now, it's not necessarily in SPY. We're in something that has high signal strength at the 3 month. The 1 month has a pullback, and there's a question, right? So we've dropped below momentum, which is calculated separately to this, but the 6 month trend is still going higher. So that might be a way for us to try and stay in the trade. It's depending, okay? If we have a load of signals that are potentially falling out, but like from a completely different sector or from a completely different group of stocks, we have 20 buy signals, well then I may not try and fight to stay in one of them, okay, because I've got these other 20 things that are most recent buy signals. So we can do it, but if there's nothing else changing, we can at least use it as a longer term indicator. We'll see as we go through, depending on what these different stocks looks like. Well, we'll go to IWM. If you look at the chart here of SPY, and then we go to IWM, depending on how quickly these cycle through, I might need to edit this out. Okay, so you can see obviously the fast moving one moves pretty quick, but certainly this 6 month doesn't look the same as what the S&P 500 looks. Okay, it's far more it is the cyclical index, so it's far more like a cyclical index. Okay, so each stock has its own set of traits, whether it's an index or whether it's a single stock or whatever. Okay, so those are the 3 metrics. Up at the top here is just min max. So I guess so what I've got here is from +1 to -1, which is the scale of all the scores, and then that's repeated here. So from -1 to +1 here, and all it does is it takes all of the slices and say, okay, what was the maximum the maximum change over time and the minimum change over time, or the the biggest negative change over time, and it plots it there. It's just a kind of it's just a bit of fluff. It's just something nice to look at. This is where the main part is. Okay, so what this does is it takes those same slices, and for any given time, so currently we're using the 3-month score. Okay, 10 days means, so it's the forward return from here. Okay, so it's calculating forward return, so we can do 1 day, 5 day, 10 day, 20 day, or 60 day. Okay, I tend to keep, if we do the 1 month, I put it to 5 day. If we do 3 month, I put it to 10 day, and 6 month to 20 day. We can cycle through those if we want, and you can kind of see there's defined things. When we look at some of the other stocks, it's not as defined, these levels. Okay, but what this does is it looks at these slices again using these inputs, and says, okay, every time it's between, in this case it will be minus 0.7 and 0.65, every 10-day forward return, what has been the outcome? So it's got a 59% positive. So 59% of all of the recorded data points are positive. Then it takes that and it takes the average positive return, the average negative return, and gives us an expected return. Okay. So you can see it kind of has these defined lumps in performance. Okay. So if we look right now, IWM is at plus 0.3. Plus 0.37, so it puts us up here. Okay, so for IWM, using the 3-month signal strength score, we can see we are here. Okay, moving forward in time, the performance is kind of just basically 50-50, pretty nondescript, but we can say, well, we've just come through a period where it has had good returns. That's over, like, not just most recently, but through time. So through time, this is built up. So the data goes back to 2016. Okay, so when it goes from minus 0.15 up to, let's say, plus 0.2 on the 3-month score, it has this period of strong returns. Okay, the percentage positive goes from 35 to 70, and it has positive growing forward returns. Okay, that's not, so where we are here, that's not the same as can be said about this. Okay, it's kind of middle in returns, 50-50, because IWM is more likely to cycle. It's more mean reverting index than the S&P 500 is. That doesn't mean that this will be the cause of whatever happens moving forward. It just may, if we're already in IWM, we might think, okay, maybe I can buy some puts against it. Or if we get a buy signal right now, we can say, okay, the returns aren't that great moving forward. What else have I got that's giving me a buy signal? Because this would probably be at the bottom of the list. Okay, if I've got 5 slots to fill and there's 10 buy signals, then hopefully one of the other 5, or 5 of the other 10, sorry, would have a better forward-looking return than this. But again, this is just the 3-month score. So if we go to 1 month, excuse me. So it's been in a strong uptrend, and it's up at plus 0.9, which puts us up here on the 3-month return. Okay, let's push that down. Okay, again, we can see for the 1 month, we can see it's just come through a period of, it's not all that dramatic, but it's just come through a period where it's relatively been strong after a bit of a middling kind of performance back here, 0.3. So that would have put it, around about the 26th of Feb. And we can change it just to say that it's in an uptrend and see if that changes. So it doesn't really change. One thing to use on the 1 month is obviously when it comes from a very low score, so -1, and starts growing into an uptrend, again using the 1 month score, which will be the fastest moving, you can see that it has high returns when it basically comes off -1, sorry, heading towards 0 this way. You can see it has good returns, and then those peter out the more it gets above 0. So it's, again, a mean reverting index. Okay, so let's jump into the first one. So the first one is Fox. So it's the A shares. Fox, I guess it's News Corp, NWS, also has two. So it has Fox and Fox A. Then you have NWS and NWSA. And the other one is Google. So you have Goog, GOOG, and Google. I always kind of was questioning, right, should I include them both? But they're in the SPY, so that means they, they're in the SPY ETF. So if you buy SPY, you'll put money into both of those. You'll put money into Goog and Google. So of course they should both be included, and that kind of was umming and ahhing about whether that should be the case to begin with. And I was like, well, no, of course, because SPY doesn't say, oh, it's in the index, but I'm choosing not to buy it. So yeah. Okay, so on the 1 month, in an uptrend. That's interesting. Let's have a look. Yeah, so it's coming off from a very low point. 3 month is still positive. 6 month is just about starting to turn up, but again, it's kind of in that cyclic-y kind of place. So it's minus 0.5, which puts us here on the 1 month. Something to be said about in the future, and this is going to be quite far off in the future, something like this profile here, okay, what I would want to have is a separate indicator that says, right, for Fox A, if the signal strength gets above 0, so between 0.1 and 0.6, you buy it. Okay, because in the past it has this big bump up in expected return, right? Again, that's going to be long off. That's going to be, in the future, but that's something, you sometimes you see these and they have a very defined big lump, and then the only check would be you go back in time and say, okay, did it come from just one specific point in time? A good example of that would be something most recent performance in something like SMCI or Nvidia. It would have this really big defined lump, and you could have to go back and say, right, was it repeated over time, or has the performance been skewed by a one-off event? Does that mean it's any different? I don't know. It's something you'd have to kind of check, but if other systems are using this kind of check, like, would they do it? So would they go back and look and say, oh, Fox A has this big lump, but it all came in, I don't know, it all came in 2021 because of X data point? Or would they just look at it and go, okay, I want to buy it when it's between these 2 points, and that's it? So yeah, that's one of the things you have to look at when you're thinking about systems, and sometimes you can overthink it, and sometimes you just think, well, if it's there, then you use it. And that's, are other people going to question it? Is kind of my point. So the 3 month is just above 0, which is kind of in this, at least from a percent positive, not necessarily the returns, but percent positive lump, and goes into this potential poor period. Again, so this data only goes back to 2020. It did get up here, but the 6 month score right now is minus 0.2, which puts us around here. Is that enough of a bit of a change? Minus 0.25, is that enough? Okay, so so it's interesting. Another check, I alluded to it on Friday, is this ranking. So I've gone through and looked at all of the stocks in the S&P 500. I've ranked them for their signal strength. So time above 0. Okay, so time above 0 on this chart. and the time in an uptrend. So the time it spends, take this as an example, the time it spends in an uptrend, okay? If it spends more time in an uptrend, that's good. Combined with being above zero more, that's even better, okay? So so this is the full 500, and then what I've done is I've taken this top quadrant here, and there's 189 stocks that are in this. So these are the ones that spend the longest time above zero. This is using the 3-month score. Longest time above zero, longest time in uptrend, and then I need a better way to do this search properly, but okay, so Fox A is not in that bucket. Okay, it's only got the data going back to 2021, well 2020, so it's at a disadvantage there, but you can kind of see it is, it didn't look like the initial chart for SPY. Let's put it that way. The other part of this is it's corrected for the equivalent SPY score. So these are all the things that have a higher trend even than the SPY index itself. Okay, I think, so not all of them, sorry, that's not correct. I think SPY would be in and around here. Okay, so the very best ones are these ones here. All right, SPY would actually be in and around here. So it's just within the vicinity. So this one down here, INCY, I believe, is the worst. CCL, I guess that's Carnival, is it? Disney's down there. American Airlines. Yeah, okay. So am I just picking from those stocks? No. Is it a check? Because yes, because I want to put in, like I said, so in the piece I have 600 of the 600 buy signals generated from my signal, not just looking at pure strength on its own. So 600 buy signals from that, and of those that have been in this bracket here, the positive return is 2 times higher than those that aren't in there. That's pretty significant. Okay. Okay, so Fox A is a question mark. It's not bad. We'll see as we're moving forward what the other ones look like. It's not bad, but it's definitely not good. So while that's loading, let's quickly do this. EOG, no, it's not on the good list. Okay, so the 6 month is just about gone back into an uptrend. There is a bit of a delay. It is kind of smoothed, so it's not going to be perfect. So minus 0.1, so puts us in here. So actually, okay, it doesn't necessarily go that great, but it's definitely from a low to a high, possibly, in strength. Let's go down. So we're just above zero, which puts us here. Drop that down. Okay, so the returns aren't that great, but it does go into a period of positive, percent positive. What if we do all day? Let's change it. Okay, kind of similar to what it's just been on. So it kind of has this dip here and going into positive, and that's kind of where we are now, before potentially looking forward another dip, so it's not that looking too great. Uh, 0.84 on the 1 month, which puts us here. So it does have this interesting point. Okay, so it's just kind of gone through this big spike. That's also going to be in the question mark. Halliburton. Let's see that. Halliburton is not in the list. Actually, didn't this one just, hasn't Halliburton just gone in? Let's have a look. Yeah, Halliburton's already in. Okay. Well, let's do it anyway while we're here. Okay. Let's see if it's going to stay in. Oh, there we go. Okay, so the 1 month has had a really quick run up. It's up here, so it's 0.6 now, which is here. Possibly strong going forward. The 3 month is just above 0, so 0.8. So that puts us in around here. Okay, so we've got this little lump of positive, but it doesn't tend to kind of last that long. 6 months. Is just above 0, so actually it's just come through what could possibly be, you know, so this is on the 6 month at least, this is looking, you know, not that great. We're just in here, so potentially that one we'll have to wait and see how long we hold on to that one. That's already in. Next one is MCO. So MCO is on the good list. I don't know what MCO is. Okay, so the 6 month has kind of since about, so it peaked in September with everything, and then it has kind of ish been in an uptrend, kind of. 0.2, so that puts us in around here, so we can see it's just been in this period of strength. Again, this is a kind of longer one, so it's not as important. So we are in an uptrend. Okay. So we are 0.2, yep, so 0.25, let's say. We're in and around here. Again, most recent period of strength, possible dip, strength moving forward. When it's in an uptrend, that kind of tidies up a bit actually. Okay, so we're in and around this here, which strengthens. So that looks a bit better. On the 1 month, we are just below 0, minus 1.2. So there's this little lump of performance. So what we can say is it has just been through this period of strength on the 1 month. So moving forward, perhaps not that great, but again, it's yeah. So what we really need is this signal strength to start getting better. And this is the kind of one. So this is a middling one, but that's what the stop loss is for, right? You don't want to be you don't want to be over picky on all these different things, on all these different metrics. It's purely just to look at it as a way to say, okay, we've got 5 slots, we've got 10 stocks. how do we pick them? Well, if one's clearly heading into a period of massive underperformance from the past, again, it doesn't, the past, well, there's all the jargon, isn't it? Past performance does not indicate future performance, right? It's just a way to try and get, like I said, 10 stocks down to 5 to fill 5 spots. That's it. 1 month, it's minus 0.3. So we are here. Okay. So it's just coming off. So it's come from a. So it's coming off a big low, at least on the 1 month, which is interesting. I don't know what is that, a bank stock? No, FDS. Is that a bank? Okay. So there you can see if you can pick up these, if you can pick things up when we're down here. Okay, that's what we're trying to do. No. What I want to try and do is pick up the stocks that perform really well down here, okay, if they go on and have strong forward performance, because that means I can hold it for longer and, you know, possibly hold it not just for longer but higher, so increase gains. Okay, so that's what I want to try and do. I want to try and find the stocks when they're down here, but the other two indicators point to it going up here and staying here for longer. That's what I want. I don't want to just get into this kind of stock picking, in and out, day trading kind of thing, which this system could be used for, but it's not really, you know, you could change the parameters of what a buy signal indicates and just say, right, just tell me when stocks are around here. And that's it. Tell me when the 1 month signal goes into an uptrend and it's below, I don't know, below minus 0.5, whatever. Okay, I don't care about the other ones. All I care is about the score and has it just gone into an uptrend. There you go. Maybe that's in the future too, who knows. It doesn't really fit my personality, so but we'll see. So the 3 month score, excuse me, it's just above 0, which puts us in here, which is okay. Ooh, uptrend. Doesn't look amazing. Doesn't look bad though. And the 6 month score, we're at 0.28, which puts us here. So that doesn't look great. So that's a maybe, but it's above the other two. CPRT, I think that's an industrial, I believe. CPRT, yeah, it's on the good list. Okay, on the 6 month, it's just above just above 0. Okay, well, this looks great. If it's just in an uptrend. Okay, so it's just above 0, and as you can see, it kind of comes into this period of strength, which is good. Which actually, this part, although we use the 3 month chart to establish it, would kind of give credence to this, right? Once it gets above 0, it kind of has this period of strong performance. Well, yeah. So that kind of gives credence to the other check. Again, this is one of the ones where, you know, CPRT is on a list that says when it gets above minus 0.7, you buy it on the 3 month. You buy it and hold it until it gets to, you know, minus 0.45. Or, you know, that's your entry to get in, and you hold on to its tail. You know, because that's a really defined change in performance. So we are minus 0.2, sorry, plus 0.2, which puts us in around here. So there's potentially some a little bit there. Let's see what the 1 month says. Plus 0.7, which puts us in here. Yeah. That doesn't look too bad. The 6 month looks great. The 6 month looks great. The the 3 month looks a bit average. So next one's ROP. That's an industrial. What's that? Roper. Is that Roper? That is on the good list. Okay, so 1 month just above 0. Let's look at an uptrend. It doesn't really change anything. It hasn't been doing great in terms of, you know, the 3 month and the 6 month. But let's see. So the 3 month has been in a, yeah, so it's gone from the second, sorry, yeah, so like the 2nd of Feb to today, it's basically gone from +5 down this way. So it's in a downtrend really. So it's gone this way to 0. So yeah, this would not be on the list. It would be a wait and watch. Here's the 6 month is not in an uptrend. It's plus 0.2, minus 0.26. Sorry, plus 0.26. Yep. Which puts us in here. So actually on the 6 month it looks relatively better. So yeah. Let's see. At the minute we've got 3 going in. Oh no, we've got 2 going in because Halliburton was already on there. I don't know why I added that to the list. So we'll have to go back and look at just the pure signal strength and see what gets added. EIX, no idea. No idea what that is. EIX, that is on the good list too. So it's just above 0, which puts us here, possibly, again, slow moving, so like this little bump on 1 month might not look that great. The best one's here, look. If you can catch it when it's, as soon as it goes into an uptrend. Okay, so the uptrend's not that great. So here, if it's in an uptrend, it's in above minus 0.5, you have this period of strength, so that's where you want to buy it really. Or at least based on the past. And if there's nothing else better to buy. 3 month is just above 0. So it's been already in this period of strength. .5. So we're in this part here. So that's a maybe. Lots of maybes. That's actually something that's so as we're moving through, like the signal tells us whether it's in an uptrend or not. But as we're moving through time, and I'll post the charts of like some of the other charts, like this one, okay? You can see, because I use this bit, it's this side instead of over here, but this is this week, okay? You can clearly see that as we move through October, you know, everything was weak. Okay, there was pockets, so here would have been energy, there was pockets of strength, com services, so I guess that would have been like T-Mobile and stuff from memory. This is when Meta would have got, what does Meta come under? Content? No. Would Meta have been in there? Google have been in there? Anyway, this is what we want. So right now we're not struggling to buy stuff. We're struggling to buy things that are even uncorrelated isn't the right word, but there's loads of stuff to pick from. We just have to get better at trying to pick getting in the video. Okay, it just didn't meet at the time. I wasn't even looking at it because it didn't meet the criteria. So the question is, do we change the criteria just because 5 stocks did amazingly, or not? That's something I need to look at. But right now there's loads of stuff you can buy. Where this system comes into its own is that in periods of stress there are things that you can still be long. So there was the insurance at this point. Okay, some of the insurance companies we'd been, well, again, I was sharing this process long before I started writing the Substack. We were long some of the insurance companies for months before they were being talked about in other places. And you can see that there was pockets of strength throughout October and November when there was periods of weakness, right? So that's what so this would have been, I guess this is utilities. Yeah, so this would have been something like CEG. What would this have been? Healthcare plans? Is that VT? No. VTRS? No, I'm not sure. But when everything's doing poorly, there are things to buy rather than just being long or short the S&P 500. You can do that. You can be short SPY and long some of these things. That's great. But where this process comes into its own is that, yes, we might be holding a lot of cash, but the, let's say, 10 or 15 things that we're holding are doing well, nominally, not just relatively. It's not just a relative thing. Oh, this stock was down 5% and the S&P was down 10%. No, these are the things that are doing well. So we're long things that are still doing strongly, and they haven't, broached their momentum and trend levels. So we can still be long them. Yes, we might be holding a lot of cash, but we look very different to the index, right? When there are, and this is why it gets frustrating now, that because there hasn't been a pullback in such a long time, is when there is a big major pullback, we capture, if the things that we currently own, break those levels, we capture all of our P&L. Okay, we take a big step, we take a step in P&L size, and then as new things come into the book, they can be incrementally larger because we've captured the previous P&L, right? That's now ours, and now every trade, although it might still be whatever, I just keep everything equal weighted at 2%. Okay, that 2% is now, instead of being $2,000, it's now $2,500, right? So more of our money is going to work in the things that we want to buy at the time. Okay, we're not just stuck riding things down. So what we had, AIX. Jen. So 1 month. Yep. We are just above zero. So again, it's been in this period of strength, just going above zero here. 3 month. Three-month has been coming down. It's just gone into an uptrend. It's now zero, so it's okay. Again, it's got this poor period in front of it. That's using all though. If we change it to uptrend, okay, yeah, so it still has a poor track record. Let's see what the 6 month says. So that, again, that's just above 0, and it does have this period of strong performance here. Is it on the good list? No. No. Okay, so again, that's strong 6 month, but the others don't look that hot. So I think we're going to have couple of spots holding cash. Let's have a look. So WST is down here, so it must be TJX. So it must be on consumer discretionary, is it? I don't know what these. I guess it's consumer dress, or is it the end of healthcare? I don't know. Whatever it is. 6 month is in and around here. Okay, again on the 6 month this looks good. On the 3 month, just above 0. So again, it's had this period of strong, just it's literally in here now, possibly weakness. Let's change it to uptrend. Again, yeah, it's not. So we are minus 0.63, so that's here. Okay, so on the 1 month, this might be one that I haven't actually talked about this actually. Maybe I did on IWN right at the start, but this is one of those ones that, okay, it doesn't look that great, potentially, but what it does have is this could be one, maybe if you can access it, to maybe use options. You know, in and around where it is now, if the 1 month can continue, so we're in and around here, it does have this strong bit of performance here. Yeah, that's interesting. That's something we haven't talked about, is so you could use call options instead of going instead of putting it in like just being cash, sorry, owning the underlying, so owning the cash shares. That's something that maybe you could use calls. That's maybe something like moving forward. Obviously I'm trying to build a portfolio to replicate or to outperform the S&P 500, but that's another thing, is that these periods of time, what I haven't said is, you know, if let's say we already owned WST and we were getting here, you know, is it something like, okay, I've owned it for the last whatever 3 weeks with performance X, you know, do I buy some puts because it's coming into a period of weakness? You know, that's something that we haven't really talked about, but that's another thing that you could, again, this is a description of the past. Make sure I get these two the right way. So it's a description of what's happened. It's not prescribing what is going to happen in the future. Okay. Who knows? When you look at SMCI, so this was an interesting one, okay? When you look at SMCI, I can't jump to the price chart because it keeps screwing up the recording. Let's make sure I've got it here. So I can't remember now whether it was the 3 month or not. Was it the 3 month? Okay, right. Now we have to take it with a pinch of salt. And when I first looked at SMCI, When I first looked at it, obviously when it was in the news, I thought, okay, this is going to be because of the previous good performance, right? But even if I just like literally scroll down to January, hit delete, yes, these numbers aren't as big, so like plus 0.7, plus 0.8, whatever this is, 8.9, no, 10.8. Yes, those numbers are lower, but this lump still exists, okay? I'm sure it was on the 3 month, but was it on the 3 month? Yeah, I'm sure it was. Okay. The point is, if I take out the most recent data, that lump is still there, okay? And the annoying thing is that if I go back now, I didn't have some of the triggers that I have now. If I go back and look at January, I believe it's January the 22nd. I believe it's January the 22nd here. It might have been, was it December? Just coming into December. Anyway, whatever the date was, the 3 month signal strength score was literally here, okay? And if you look at the chart, it already had a good run from whatever, 100 to 500 over the last year. But the 3 month score was literally coming into here, and it signaled a buy on my now new trading signal. And it come at a time where in the past it had already had good performance. So that was in equal parts annoying and, I don't want to say vindicating. It's going to take a lot more back testing to vindicate whether this is, like I said, in the past, is SMCI going to be right? Okay, as soon as it gets above 0 on the 3 month score, buy it. Who knows? Right? But yeah, the point that I was trying to make was, like anything, obviously the narrative had built up around at that point. But if this is some kind of system that other systematic people are using, it was just super interesting that it came at a point, in time where the past had said it always has had strong performance anyway. It just happened to be at the right place at the right time for the news to come out, and it went on a massive run. Now, obviously, it was much bigger than 3% returns, but I just thought it was super interesting. Yeah, I don't think SMCI makes it on the nice list just yet, but we'll see. This has been pretty long and rambly. If people watch, okay, yep, that's great. Like, thank you for sticking with it this long. This is just one part of it. I then have to go through, I then need to go through and measure all of the individual signal scores, where they rank against each other, which ones have moved the most over X amount of time. So yeah, it's the type of person I am. I am trying to simplify it all the way, because if I can get 80% of the performance by only doing one set of data instead of 3 sets of data, then I would much rather do that. Well, let's do this. So all of these have populated so far anyway. So these charts look at the distance to momentum and trend. Okay, so if everything's up here, that means it's above trend and momentum, which is good. Interestingly, gold, well, the only allocation to gold in the S&P 500 is doing poorly. Disney was all the way right down here and has moved up and come back again. We can see here FOXA has just moved above. Garmin, which has gone in, is up here. I believe Zebra went in as well. Yeah, so I'll post each chart. I can't remember if these are still on the list, so everyone can access it using the link or not. I'm not sure. I'll check that. So yeah, so I'll post the link to this one. Possibly more interesting right now is what I haven't done is these are just nominal. It's not like volatility adjusted, because all stocks should be treated completely individually. We put them into these baskets, but who's to say MSCI has put everything in the right basket? Maybe instead of 11 baskets, 11 sectors, we should have 50 and whatever, right? The other part of that is that just because it's an industrial doesn't mean, we say, oh, industrials are cyclical. Yeah, some of them are, some of them aren't. Oh, industrials are high beta. Well, yeah, some of them are and some of them aren't. They're their own thing. A good example is utilities, right? CEG and NRG look nothing like everything else that's in utilities, okay? It's in there because they provide power, but the market, the machine, the system doesn't treat CEG like the other stuff that's in there, right? It doesn't treat it the same as a water company or an electricity provider or whatever, right? Even though it's a renewable energy provider, it's not the same, but it's in this bucket. The one thing with this is it's not vol adjusted. So for something like NEE being up here, it might be nosebleed for it, because it normally sits in and around here somewhere. Okay, so this isn't vol adjusted, but this different measure is just using the pure momentum score, so 3 month and 1 month momentum. So if it's all the way up here, it has really strong 1 month there. So HIG is at a maximum on the 1 month score and 0.988 on the 3 month score. Okay. Yeah, so it doesn't matter. It's purely based on the score, not on how much it's moved. So in a way, it's not vol adjusted, but it doesn't take into account how much it's gone up, how much it's moved nominally. So these charts definitely aren't shared, and I will do that. So the predominant thing is everything will kind of move in the. So if we take it as 0 here, everything, the kind of modal outcome is you slowly move this way, okay, as both, well, this way, I guess. You'd kind of do an S. So you'll move up because the 1 month score will move faster than the 3 month, and then eventually the 3 month will maintain, it will still be strong, and slowly the 1 month will start falling off. So you'll start to come down again. That's kind of, we're moving up to here. This is where the strength is here. Okay, so communications. So we've got Netflix in here. Where's Fox? So Fox A. So Fox A is just kind of above. So that's kind of and that's the next part. Like, is there a signal now where, we've gone through that list and some of them aren't on the good list? The good in inverted commas. Now, it doesn't mean that the signal's perfect. That's just something I use to try and, cut. Instead of having to look at 500 different things, it forces me to go and look at 20 things, let's say. But is that a signal in itself that some of the names that are now being put in or being put forward as potential buys are the things that don't normally continue? Or is that potential alpha that, okay, this thing in the past hasn't been treated well, but it has, broken out, or has broken out on this score? Is that something to say, okay, you shouldn't be discounting it because it's not done this in the past? Put it in. That's what you have stop losses for. Okay, you have no idea what it's going to do in the future. Just put it in. It's a buy signal. It has good signal strength. Put it in the book, and if it dies a death, like some of the things that like First Solar did this week, and you lose 7%, okay, you've lost 7%, but on a 2% position. You know, take something like Meta. Like Meta, when we put it in the book, was already up something like 220%. Now, if you were looking at that anyway, like, oh, I'm going to wait and add it on a pullback. It never had a pullback, and we managed to get an extra 33% out of it. So there you go. Would I have wished to get 230 instead of 30? Yes, but you know, how many people were at the time buying it when it was like $70 or whatever after it had just come from 300? Not that many. Although if you look at Twitter, there was probably millions and billions. Everyone on Twitter bought Meta when it was down, whatever, 80%. But yeah. So I'm going to add this to the list. What else? We've got the dashboard. I'll add this. Oh, something's obviously not calculated properly. Peak. I don't know. Like, has that been delisted or something? That came up on Friday as well. Anyway, I'll have to have a look in that. Yeah. So energy is. So yeah. So week over week, energy has had the best returns. Also month over month, along with materials, it's fallen behind materials a bit in the 3-month score, but by far it has the most, you know, almost 100%. The only ones that aren't are EQT. So EQT isn't above trend and momentum, and APA isn't in an uptrend. So there we go. So that's something to look at. That's just something, okay, everything else is doing so well. Is that like a short and it should be shorted? Who knows? Or is it, okay, moving forward, once it goes into an uptrend, is there the potential for a catch-up trade? Who knows? That's something to look at in the future. Potentially, though, some of the big performers have been the refiners. In terms of like energy and everything, yeah, the counter play to that is, okay, if oil breaks out, then these guys are going to underperform because, you know, they've been able to, if their input, so if oil goes up, if their input goes up in price, it's going to squeeze their margins. So is that something, you know, so if the rate of change of oil goes up more than the rate of change of gasoline prices, you know, are these going to underperform? I don't know. That's a bit of random nonsense. Who knows? They've got strong positive momentum. MPC, I don't know why that's not on the book. That's very annoying. That's very annoying. But yeah, this is a work in progress. I'm not here trying to tell everybody that like this is perfect and everyone should follow me and pay me loads of money. That's not the case. And the reason why I'm sharing it and doing it in this way is ideally I'd want people to come back and say, well, okay, that's interesting, Chris, but have you thought about doing this, or have you looked at that, or whatever it is. Okay, how have we looked at doing such and such to try and, you know, do this better? Have you looked at this paper? It's whatever it is. Okay, so from a kind of selfish point of view, is hopefully there's people out there that'll go, yeah, you want to do it like that. Yeah, so I've rambled on way too long, so I'm going to finish it here, and it's probably going to take me ages to edit this, but we'll see. If you made it this far, thank you very much for listening and watching. Yeah, comments, everything, whatever you want, good, bad, everything. Like, I want to hear. I hate being in this kind of just transmit mode. It feels very alien to me. I'd love as much interaction as possible from the group. yeah, and I really feed off that, so hopefully we get lots of comments and things off the back of this. Let's see, probably only 2 people will get to the end of it, and if you do, the lottery numbers are